Alright, we are back. The Federal Church presents Better Than Bloomberg. Shit fucks hacking in my phones and computers. Probably didn't like what they were hearing. A little dose of reality. Computer just magically shut down even though the battery was fine. But back to what I was saying though. So, just knowing how these shit fucks operate. Basically, you only end up at a fucking regional bank if you're a dipshit. I mean, it's just the reality of things. I mean, it's safe to assume that the dipshits fuck things up. So now your deposits are at risk. So if you have, any business with a small regional bank and your deposits are greater than $250,000, you should probably move your shit as soon as you can. And don't forget the wires take some time. Sometimes take days when, a lot of wires are going through. ACH transfers even worse. But, even if you don't have it above $250,000, there's also the question of your very liquid cash that should be there immediately not being available to you till the bail-in administration corporation there decides that it finally gets around to, paying your insurance claim, so to speak, there. So that would be the only considerations I would have to say for that. But just, knowing how those shit fucks are and the people that work there, it's pretty safe to assume that SIVB won't be the last one to have this sort of thing happen to it. So, it's probably something to think about if you have your business accounts or your personal accounts, even worse. Because nobody, this is something I've said before too. And, who did I have on the phone at the time? He was some shit fuck from Bank of America or something. I told him, nobody in the right mind would put any fucking significant amount of money in a fucking American bank. Nobody. I mean, you just have to be retarded to do that. This is why. Which boils down to the following. If depositor confidence in the regional small bank sector is now shot, there should be no confidence in that whatsoever. Again, just simply, from the kinds of people that end up there. And, somewhat of an analogy to it is, you go somewhere with medical treatment for medical treatment, generally you want to have the best doctors there. Now, other people might be able to call themselves doctors, but they can be absolute dipshits. So you probably shouldn't go there. This is one of those situations. And after both Silvergate and SIVB, it very well may be we will see a small to medium, if not larger, deposit run among the regionals, which could prove devastating for these reserve-constrained banks, which will need to scramble to raise capital a la SIVB and would eventually transform into a death spiral for the sector. And again, it's not unlike the savings and loan shit from the 80s. There've been several, waves of bank failures through the history of the United States. It's not unlike that. It's not uncommon. But there's a reason why it happens. Fractional reserve banking. And now you have interest rates and inflation. Mega inflation. Especially if depositors take one look at what's going on with the regional bank prices, which have been in free fall in the past 2 days, and extrapolate what may come next. There's a reason why banking is the ultimate confidence game. And again, what Zero is alluding to there is, again, fractional reserve banking. Which, I'm sure if you have any significant amount of money, you should know about. And if you don't, well, there's a good movie about it. I think it was the one with the Rothschilds. It was one of those movies where, he'll take in the deposit, say it's $1, and then he'll lend out $10. And then take another deposit. And that's exactly what fractional reserve banking is. So then, when the people want their dollars back all at the same time, well, he doesn't have it. There is one way to short-circuit this process. These fucking shit fucks hacking my fucking computers. There is one way to short-circuit this process, and it, of course, involves the Fed, which would need to step in the way it did in 2019. I'm laughing because this isn't one of those times. Or they can't at this point. That's what I was saying about the IMF and their shit SDRs that nobody will give a fuck about. At least not all the people with the manufactured goods, the natural resources, and, well, all the advanced, missiles and such that you have no defense against. It's hypersonics. To step in the way it did in September 2019 when it was the big banks, namely JPMC, that were reserve constrained and forced the Fed to launch not QE, but only after the U.S. repo market suffered some historic roller coaster moves. That's an even better video to make, by the way. Ironically, even if the Fed does somehow whisper words of reassurance, which they can't really do, the question is, why would depositors park their money at suddenly risky banks when they can just buy a six-month T-bill and get the same return with zero risk? And this again goes to the whole point of liquidity and demand deposits, right? Wherein that's largely what somebody would make the argument. Why didn't you money? Well, that's the thing. Even if it's FDIC insured, you're not going to get it that fast. So, yeah, you'd probably go to the, well, I don't think they can transact in bullion, but, the stuff that's backed by bullion, again, there's again the retards that got you into this situation to begin with, and they still haven't learned. But, yeah, people ask the question, why are they in this situation? That's why. And back to what I was saying, though, wherein, yeah, you're going to have to find something outside of their failed banking system there. Yes, the Fed may have no choice but to cut rates if it wishes to save the regional banking system. Good. Why would you do that? To prop up zombie, for example, like zombie companies that aren't profitable, or even better, companies that are run by inept shit. But then again, the Fed is still stuck fighting runaway inflation, which again is even better. Which means that Powell is now trapped, and as we tweeted previously, Powell is now trapped. More hikes, regional banks collapse, less hikes, inflation target must be raised. And that's the thing, it's not just regional banks. And inflation affects much more than the banking system. Tough spot for Jerome there. More hikes, regional. That's what. Powell trapped. More hikes and CRE leads to tens of billions of increased losses across the banking system. AFS and HTM. Small banks now reserve constraint guaranteeing something breaks. Well, it's a lot worse than that, actually. Not something, it's a lot of things. Meanwhile, inflation is still high. Yeah. And that's the fucking entertaining part. Because, it affects everybody. Just like anybody who thought they had a retirement. Well, now it's gone. So will Powell let America's small regional banks risk failure as a result of his rate hikes, an outcome the likes of JP Morgan would find quite beneficial, as it will make them even bigger? Or will the Fed chair step in the way he did in 2019, even if it means gambling with runaway inflation? The right answer to that question could make some traders extremely rich. Which again goes to the question, do people understand why they're in the situation they're in? It's because you didn't donate to the federal church and pay your tithes. And now Jesus is bringing you biblical floods, especially in California where SIVB is. That's why. Oh, and your heathen queerosexuals, just like you saw there, who still have not learned. That's why you're in the situation you're in. And yeah, there will be some people who make a lot of money off their fucking idiocy. quite entertaining. But make sure to donate. Let's take a look at the other articles, other write-ups here on Twitter. Here are the banks facing the highest deposit run risk. And this is what I meant. Where that's probably all banks. Because even if you're in one of the larger banks, pay the money, the JPMC, because they don't like chump change customers. Guess what? They go under too. Even if they didn't go under, if they're in some sort of whatever shenanigans the Fed might fucking have them do, doesn't mean all your money is available immediately. Even if it's insured, they have to go through all that crap, see how much of a haircut you take, even if you get your money back. That's if you get your money back. And even if it's insured, how long till you get that check? How long till you get that wire, I mean? No, and the answer is, as long as they fucking feel like it. That's the real answer to it. So, you either go to something electronically backed by bullion, or go on the blockchain, which, you know, isn't a bad idea because, guess what? 7-minute transactions, and all your shit's on the blockchain. As long as you're not having it in some custodial bullshit like the Coinbase shit's over there. When it's in your own wallet, you should be fine. As long as you donate. And make sure your queerosexuals know their place. And, you know, pay your tithe. But the point being, though, if anybody has a significant amount of money in not just an American bank, but probably European ones as well, or, you know, with the exception of maybe like, you know, Switzerland's or Singapore's who have banks that are really well capitalized, maybe the Hong Kongs, Shanghai, you should probably move your fucking money. And even if you are in one of those well capitalized banks, when you're in a sort of, you know, financial collapse, calamity, whatever the fuck you want to call it, you know, not unlike the stuff that happened in 2008. And look at the queerosexuals again. You should go fucking learn your lesson. And they still haven't. When you're in that sort of calamity, guess what? Sometimes transactions don't get processed. You don't have access to your funds immediately. You know, sometimes they have a bank holiday. You get to learn that one too. So, if you have any access, you know, if your institution or institutions are in any way somewhat questionable, you should fucking move your money now. Earlier today, hedge fund manager Bill Ackman tweeted something very long, which, despite being traditional, I didn't pay for the zero hedge premiums though, so we're just gonna see what this. Which, despite being traditionally self-serving, who cannot forget Ackman's Hell is Coming tearful CNBC appearance, which meant to spark panic, chaos, and more selling, not to mention a $2 billion payout there, which is also correct. Absent JP Morgan, yeah, this is the stuff I was on. That's the reason why I put it up. Nobody's gonna fucking acquire SVB. It's a fucking, you know, a depository institution that even fucked that up. There's nothing of value there. We do not have premium access to this stuff. Now, we expect mass layoffs. The real-world impact of SVB's failure. For most people in America, the news that a bank in Silicon Valley has failed will be forgotten quicker than a story about soaring shoplifting in their local supermarket, because they're full of cultural degeneracy shit, just like in the gay area over there. It shouldn't. Reality is that the contagion of the shuttering of the 18th largest bank in the U.S. are widespread. SVB is in fact the second largest by assets bank failure in U.S. history after Washington Mutual. And again, this is exactly what I was saying, wherein the causality that people are getting all worked up over on their little news media there is going the wrong way, or it's coming from the wrong way. They're thinking that SVB will be causing all these other failures, when you have a big fucking problem here, and SVB is just a domino to fall. And there will be plenty of other little dominoes to go with it. ones around SVB and its little, connected network there, which